Just a reminder, nothing in this video is trading advice or signals or anything like that. If it sounds like I'm talking to you or giving you advice, I'm not. I'm just talking to myself, and you're getting to watch this video and listen in. All right, let's get on to today's video. All right, round 3, trade plan overview, markets my way, prop firm trading. Yes, round 3. Topstep changed their rules and their requirements, so I decided to change my trade plan so that I can accomplish the things that I was trying to do with this series. So for those of you who are new and this is your first time watching this video, just do a quick recap, get you up to speed. I started this new round, which was round 2 with 50K combines, thinking that that would be the deal. When Topstep changed their thing, I decided to throw away my combines and I jumped right into 150K XFA, which was impulsive and probably dumb to do. And then I did have a express funded account, 50K, and I could have, I guess, traded it responsibly and took a payout and then let that payout pay for everything else going forward. But that's going to take time. That's going to take weeks. So I kind of went big or go home in that express funded account, so I can either take a payout right now kind of thing or get on to round 3. Well, I blew that up. I blew up that express funded account doing the go big or go home theory, and I went home. So here we go. I get to start round 3 and I don't have to wait. With the new trade plan, a little bit of a new strategy, pretty much same strategy, just a little bit different on the 5-minute candle. Going back to my roots a little bit. It's a little bit easier for me with what I have coming up for the rest of the year, because this trade plan really, it spans out at least 4.5 months and then into the next year. And looking at what my lifestyle is going to be in that time, the 5-minute candle was going to be better for me as I get into the summer months. So again, trade plans, I believe they have to fit your personality, your lifestyle, and your goals. You get your trade plan, which is your roadmap, and then your strategy is your vehicle that allows you to travel that roadmap and get to your destination. So that's the way I see the markets. I never hear anybody else talking about it that way, but that's the way I see it. And again, this is Markets My Way, prop firm trading. All right, so I put together my steps, basically 10 steps to success with the prop firm, with Topstep, and how I'm going to accomplish going from Combine, which is an evaluation account, to a funded account. They call it the Express Funded Account, XFA, and into a live account. The goal being get into a live account as quickly as possible with the most amount of capital as possible. Topstep's new rules basically say that you can only have, well, it's not new, but you can only have 5 XFAs. What is new is that you can only take 5 payouts from your XFA, and each payout, the maximum payout is $5,000. So the most you could take is $25,000 in payouts per XFA, regardless if it's a 50K, 100K, or 150K. And when they call you up to live, which will be either after 5 payouts, or it doesn't matter if it's 5 payouts or if 1,000 or 5,000, that they just said 5 payouts, or you max out your account, which used to be $50,000. I'm not sure what that is now, but if you max out your payouts for sure. And then also it could just be at their discretion at any time they decide to call you up to live. Well, I want to be called up with at least $50,000 in my account, ideally $100,000 to $150,000. And the reason is, when I'm in the live account, I want to only risk 2 to 3% of my account, so trading is easy. And I'd hate to get called to live at $10,000, because once you go to live with Topstep, you can only have 1 account. If I had 5 accounts at 10,000, I could copy trade, then basically have that 50,000 number I'm looking for. So I don't want it. Last time I got called to live, it was with $10,000, and that I didn't like that at all. All right, so here's my steps to success going forward with this new round 3. First step is to create my trade plan, and then to get a rough strategy that fits that trade plan. Then pick my prop firm, and then I got to blend my strategy. My strategy has to fit within my trade plan and within the rules and all the requirements and all that stuff of the prop firm. So then I got to blend that strategy and make sure it all works. sim test it to make sure it works. And that can be done with replay. I don't have to sim test it for the next 6 months. I can literally do replay in fast forward and do it that way. At least with NinjaTrader, you can do stuff like that. And then I need to track. I need to set up an ability to track what's going on with my strategy, right? So I can look at the past and then look and see how it's working going forward. And then the next thing would be to set up a seed account, which basically, if I were, I'm trying to do this fast forward here for my channel and not drag you guys along a ride for a year. But a seed account would be getting like a 50K combine, the cheapest combine or evaluation account possible, and proving to myself I can get funded, which I've already done. I've made it all the way to live accounts with Topstep. So prove that I can get funded. Once I got funded with that seed account, I could take a payout and then use that money for everything else. And by doing that, I've invested $50, plus the activation fee of $150. So $200 investment. And then that allows me to carry everything forward. So I've proven myself. I've only invested $200 and I can get on to making, lots of money. Or I have lots of failures, but they're only $50 each. So it's not so expensive compared to a $150 account. All right, so seed account, check, got that done. All right, so seed account, done. So now I went and got my 150K evaluations. I'm starting with just one, and I'll show you that here in just a second. And then from there, I want to get my $125,000 in payouts and then go live and hopefully go live with $150,000. So with Topstep now, when you go live, you can only go live with the highest XFA you have. So if you have a 50K and 150K, you can go live with $150,000 of capital in your account as long as you've made that much money. And you can go live with those rules, 15 contracts, all the different stuff. If a 50K account is your biggest account, then the most amount of capital you'll be able to carry over to live is $50,000. Now, one thing I've seen with Topstep on their Topstep TV is they keep showing their call-up board. And they're calling up people to live with just a few $1,000s in their account. Now, I don't know if that's because those people took a payout transitioning from the XFA to live, which you can do. At least you used to be able to do that. And that's why they ended up with such a small amount going into their live account. Maybe they didn't really want to be in a live account, so they did it that way, took the payout, and then they're going to blow their live account. I don't know. But not a lot of people on their call-up boards are going to live with the max amount. So I'm hoping that 150K call-up, I should be able to get, hopefully I can make it to where I at least have $50,000. Because if I have 5 XFAs and they all have $10,000 in it and they call me to live, well, then I'll have at least 50,000 in my live account. And that's kind of the goal there. Once I'm in my live account, I need 30 days of $200 or more, and then I could take 100% payout if I want to. So at that point, I can decide whether I want to stay with Topstep or if I want to go do something else. Right now, the plan is to stay with Topstep, but we'll see how things progress as we get there. So one of the biggest differences between their 50K, 100K, and 150K evaluation accounts and XFAs is really about drawdown and percentage of account risk. So if you want to risk 20% of your account in a 50K account, well, then you're only risking $200 to start. Whereas with a 150K account, I could be risking $450 to start. Why that matters is depending on the time frame that you're trading and the ticker you're trading, if you're trading in the mini or the micro, for me, my strategy on a 5-minute time frame with gold in a mini, one contract is usually $200 to $300 risk. So, that exceeds that 20% of a 50K combine. So the 50K doesn't really work for me because it'll be really difficult to sustain that. I'd have to get on a winning streak right out of the gate and not make any mistakes to be successful. And when I convert that to an express funded account, now it starts to get expensive. I have to start over and I could blow out and it would be not worth it. So trading the micros versus the minis, the micros are expensive because of commissions. So you have to factor that in. If each micro is going to make you $20, then after commissions, it might be making you 15. But if you take a loss on the trade, then you're losing 25. So now you're risking, 25 to make $15, you have to have like a 2-to-1 or 3-to-1 risk reward for that to kind of like blend out. So just something to think about trading the micros versus the minis. Factor in commissions because sometimes it's not worth it. Okay, so if I wasn't doing this for my channel, I would take a slower approach to it. I would start with my 50K evaluation. I would get funded. I would take a $2,000 payout. Then I would blow up that 50K account because I wouldn't want to keep it. I wouldn't want that to get converted to live and I wouldn't want to keep it. So I would just grenade that account right away, use that $2,000 and, maybe do like one big YOLO trade on it and see if I can get another payout for like a lot more money, but I pretty much just blow it. Then I would get 150. What I did do is I'm getting a 150K account, which I got one already. And then I'm going to get that one funded. Once I get that one funded, I'm going to take a $5,000 payout on it because I can take 5 payouts. So I'm going to take the first one, 5,000, which is the max per payout. And then I'm going to use that 5,000 to get 4 more 150K accounts. I don't want to get these accounts until then because that would cost me a lot of money. And I want to do this as cheap as possible. So let that buy me 4 more accounts. And then I'll put this one on hold, the first one on hold. I'm going to copy trade those 4 until I get them up to speed equal with the first one. And then it'll be easy to copy trade them all on the same scaling plan, which I'll show you in a minute. So then I will copy trade all 550K accounts. And then once I grow those accounts to where they're at $35,000 each, I'll start taking $5,000 payouts. The key is that I need to take my 5th and final payout of all the accounts at the same time. So this way, because if I'm at 4 payouts in all of them and then one account, I take that 5th payout, then I could get triggered automatically to live and I miss out on the opportunity for all those other accounts to provide that 5th additional payout. So I want to take that 5th payout with all accounts at the same time, if I even get that far before they move me over. And then hopefully I can go live with $150,000 in my account. And at that same time, because I'm taking these payouts, I would have 125,000 in payouts, going live with 150,000. Things will be on cruise control, be easy money after that. Because I'm basically going to trade risking 3% or less per day, not per trade, per day in my live account. So that thing will be, cruise control, easy money. All right, so that's the plan overview. And there's a lot more that goes into a trade plan than that. How much money do I have every month to spend? What are my office supplies? What's my computer cost? Putting my reserves together. Like there's so much more that goes into creating a trade plan. My personality, my lifestyle, and my goals. Like, there's a massive amount that goes in. But I just wanted to give you kind of the end results of the trade plan, like the report that would spit out at the end of creating the trade plan, to give like a high level overview of what's going on. You'll see in my video series going forward. So now let's get on to the strategy. The strategy is that vehicle. So what am I going to do inside of the parameters of my trade plan to achieve those goals? All right. So what you're seeing on the chart right now is an indicator that, 2 indicators actually, that I put together. It took me about 5 years to sort out and then many more years to refine. But the indicator really isn't what's important here. For me, trading, there's 2 ways to trade. Discretionary, which basically, for me, discretionary is when I see patterns or I see things, maybe it's a bullish engulfing candle or a head and shoulders and, and whatever might be going on the screen, I decide to take the trade. That's discretionary. And that to me translates to casino trading. The other way to trade is statistical trading. And in order to trade statistically, there needs to be some kind of solid data set to trade against. That could be a lot of things. I mean, it could be the VWAP. It could be, Bollinger Bands. It could be moving averages. It could be a lot of things that you can use as a thing to get your statistical data set from and trade off of. I prefer to trade off of statistics. I have more fun trading discretionary because it's a rush, because I really don't know what's going to happen, right? I'm just kind of throwing the dice and hoping, even though I'm hoping that this head and shoulders is going to break and it's going to work this time, kind of stuff. And I hope that, I stayed in the trade long enough to maximize. Whereas statistical trading, I know when this thing happens that I'm trading against, I'm going to get in And as a result, this will be my target and this will be my stop, and it's pretty much all already decided. So I prefer to trade statistically. So I have my indicators, 2 of them, and the bottom is volume, and this is average volume. So that yellow line that's running there is showing me what the average volume is over a specific length of time. So basically, when the indicator switches, that's telling me that there is a potential trade. That's the trade trigger. Down here, I have my permission, which there's different ways that I use this, but basically I have my permission. And then I'm looking at volume. And I've said many times in my videos that when there's really big volume, are there any sellers or buyers left? And it makes me nervous to be in a trade when there's big volume. So I don't want the volume I'm using to get into the trade when my trigger sets up to be the biggest volume of the day. As long as it's equal to or less than the biggest volume of the day, like this candle right here is a tiny bit smaller than this candle here, then I can go ahead and get in that trade. And I'll show you this trade actually taking place here in just a second. This was a trade I took on on Friday to start the new 150K XFA. Wish I wrote it to the bottom, as you know, all of us always wish we were like, man, I wish I would have stayed in it longer. But my target is right here. So my stop is right here. So I have that little bit of my stop, and then my target's here, giving me a risk 1 to make 2 on the trade. And a lot of times I can squeeze more out and make 3 or more on the trade. But I need to capture at least 2. So once I cross the 2 marker, I have to trail my stop. And if I get lucky, I can make more. And if not, at least I captured my 2. If the trade's going sideways for a long time and other things are starting to show up that are not looking good or not normal, then I can exit my trade as long as I capture at least 1 so my winners can pay for my losers. So in a nutshell, my strategy is simple. I'm on the 5-minute candle in gold. I look for my switch, triggering the trade. Do I got permission? What's the volume look like? Is it the biggest volume of the day, or are we still under that? And then if all those things line up, then I can jump in the trade. If not, I have to wait until a setup takes place that I can get into. And then I mark up my trade based on wherever the little box is. This is a simple switch box strategy that I use. So wherever that little box is, I mark it up from the box to the close of the candle. I'm entering on the close of the trade. So I enter from there to the close of the trade using one of the little bar graph tools in Thinkorswim. I think they also have it. And I just mark it with one of the those channel tools that you have on pretty much every chart. And I've added the extra channels so that I can see all these different potential levels here. And that's it. So that's how I mark it up, from the box to the close of the candle and going. And as my trade's switching, this box is moving. So I can mark this up at any time and I can see my risk. So I can look at it before I even get in the trade and see that, you know, my entry is at 3038. My stop's going to be at 3041. Because it's gold, it's easy. I can see that, you know, I have like basically a $3 risk, which translates to $300 in gold. If it was one of the more complicated charts where the conversion can be difficult, then I use a calculator I have in the My Strategy Manager tool that I like to use. Link is in the description below. It's a Microsoft Excel document, which I use to build my trade plans, track my trades, all that. We're going to get into it in a second so you can see the rest of the plan and the strategy. But I'll use that calculator. I'll show you real quick. So I have my calculator here, and then I can, you know, pull up the ticker. Let's say it's NQ. We'll just leave that. It's there now. If I'm looking at one contract and it's a $15 move, that's a $300 risk. And if I had 2 contracts, it's a $600 risk. Or I can say, you know, I'm looking to get in at, you know, 2031, and I'm going to get stopped out at 2021, and I'm trading gold. So then I go down to gold, and then with one contract, that would be $1,000 risk on that trade. So pretty handy. And then I got this other one down here, which I use where it's kind of reverse. If I want to make, say, $700, I want to pass my combine, I need $700 to pass it. Let's go with, let's say I'm trading on, I don't know, micro Bitcoin, and I got one contract. In order to make $700 $100, I would need a $7,000 move, which is pretty easy in micro Bitcoin, or maybe I have two contracts and I need a 3,500 point move to make that 700. So very handy calculator for me to quickly make decisions while trades are setting up. So as that moves, I can mark it up, see what the spread is there, know what my risk is. And then from there, I can figure out how many contracts to buy. I manage my risk through contract or position sizing, not by where I put my stop. My stop goes where the statistical probability tells me that once the stop gets tripped, I could be looking at consolidation or even going the other direction. Statistics are no longer in my favor, so I need to get out at that point. So that's why my stop goes there. Some people I know, they put their stop because they don't want to lose more than $500, so they move their stop to $500 away. Well, that's discretionary trading. To me, that's casino trading. And yeah, it's a bummer when you get stopped out like that and then the trade goes in your favor. You just put it in the wrong spot, right? Which still happens to me with this, but at least I know I got the statistics in my corner that over time it works out for my account. So yeah, calculations are in, stops in, and then my target's the same thing. Statistically, I know that this target is ideal. Could I get more? Yes, but will I get it on every trade? No. Same thing with the other direction. This spot right here seems to give me the average that I'm looking for. So that's why that bar ends up being my target. All right, so now you got the strategy. Let's go look at, or the gist of the strategy. Let's go look at the My Strategy Manager and show you how I put that in there to then determine what my path is forward in order to be able to achieve my goals with Topstep's new rules, as well as my trade plans rules that had set for me and my strategy. How do I blend it all together? All right, so I go through my workbook down here. I got my trade plan workbook, and then I got the strategy workbook. And as part of that strategy workbook, I have this little thing here, and then I can click on, the little window, and it pops it up on my other screen. And then I can zoom in and see the strategy that I'm working on and so on. So, and it gives me my notes that I need to look at for my strategy, just as reminders, because sometimes I might put a strategy on hold because it's just not working great anymore. Market conditions changed, and I might want to revisit it later. So I save all of them so that I can revisit them later. It's not, some of them I'll keep on tracking, and when they get back in favor, I can start trading them again. So anyway, so I'll go through there, put all my strategy stuff in. And then with that strategy, I can backtest and I can trade and track and see what's actually happening. So right here, I'll go through 90 days and my strategies are risk 1 to make 2. So right here, I put my list here where I have the risk reward ratio, because that's important to know what that is in the end, and my trade ratio, because that's also important. And I'm only going to take one trade a day. I may take some evening trades when I can't trade in the day. I have a little optional strategy for that. Basically almost the same thing, but a little different. And just looking for a few $100s there. And then on here, I put my link so I can click on the link and remind myself of what this looks like on the chart. So I have that there for easy reference. And once I go down to the bottom, I can look and see, per trade, right now I'm at 65%. And then I'll continue tracking it as I trade here. So down here, I'm going to put in 52 and 28. And I'm going to put in 82.5 and 28 because I want to see if this percentage is falling off as I'm trading it. And if it is, then I know my strategy is what's breaking down and not something that I'm doing. And as it starts to break down, I can hit pause and evaluate what the next steps should be. So with winners, you have to pay for losers. So right here on the risk reward side, I have 82 rewards, 82.5 rewards, and I've given away 28 risk, if you will, losses. So after the rewards pay for the risk, I'm left with 54.5 rewards. And then up here, let's go back to one account. With $1,000 risk reward, I am, I'm making 2,000. So I can put my wins, right, per win, 2,000. And with one account over this time period of 90 trading days, which is about 4.5 months, I'm making $109,000 with one account. And copy trading, I would have 545,000, except Topstep would never let me hit those numbers. So it won't matter. I can easily, if I was just going to trade this out the whole time with 5 accounts, risk $500. And then that tells me that if I can't, if $1,000 is going to exceed maximum limits with the prop firm I'm trading with, why risk that much money? Whereas if $500 keeps me within that risk and I can still make the money I want, then that's where I should be. So this helps me determine a bunch of stuff. How much should I be risking per trade? But also, how much will I make over projection wise? Not for sure. Anything could happen. Tomorrow, this might not work at all and I blow up everything and I have to start over. But projection wise, speculation wise, in the future, what does this look like? This is 4.5 months. So how does that translate to my profitability? So I go over to my scaling ladders, and there's a bunch of other tools here that I use as well, but we'll skip those for now and go to my scaling ladder. And now in the scaling ladders, this automatically will fill in green as I'm making money. So $4,500 is what I started my 150K combine. Right now, my first day trading it, I made $2,100. I say 4,500 because I can't lose that much money or else I blow up the account. So first day I made 2,100, but if this was at say 5,500, it automatically turns green, letting me know where my risk is. So I can risk $900 when I get there. Once I get to 6,500, now I can risk 1,080. And that lets me know that I'm within my risk of 20%, which I'm accepting as my risk for my combines. So let's take that back to 2,100. Why am I accepting $2,100 as my risk for my combines? How did I come to that conclusion? Well, in 90 days, I can see that I've never had more than 5 losers in a row. And I've never really had a sequence that if I risked 20%, it would blow up my account, provided I'm not making a lot of mistakes. So 20% is a safe risk for this. The downside to it is 20% is a psychological and mental fitness challenge because it's a lot of money when you're looking at $4,500 blowing up the account. So not a feel-good number, but data supports it. So that's where, and it's a combine, and I don't mind if I have to reset them. When I get to my live account, I don't want to risk 20% a trade, and I actually can't unless Topstep gives me special permissions to risk that much, because the most I can risk will be $3,000, which is a DLL that they have set for you in the live account with the 150K live account. They'll change your parameters if your trade card warrants it, but that takes time to prove yourself. So I'll be starting with 2 to 3% there. And then, and plus from a mental fitness standpoint, it's a lot easier to stay in a trade and do what you're supposed to when you have such a tiny risk on compared to the account, right? $4,500 blows up the account. If I'm risking $10 a trade, no sweat. Risking $1,000 a trade, a little bit scary. But again, data supports it. So now I can look here and see that once I get to this number here, I pass my combine. So that's basically 4 trading days that I have take home, that I have profits take home without any losers in the middle. So clearly it'll be longer than 4 days, but the fastest it would happen would be 4 days. Then over here, once I pass that, I get to my Express Funded account. Once I get to this number here, which is 1, 2, 3, 4, 5, 6 days, again, losers in the middle, so it'll be longer than 6 days. With a 65% win rate, there's definitely losers going to be in there. But I'll have $15,944. So at this point, I'm going to take my payout of $5,000. So I have every step of my process planned out. So there's no guessing. And I want to do this before emotions get involved. Once emotions get involved, and then I have to make decisions, not good for me. So I want to have it all planned out. So I just do what's in my plan. So once I get to this payout, then I'm going to get my other 4 Express Funded accounts, 150Ks, and I'll go through this process again. And I can look and see that's going to take me about 6 days to get into the Express Funded account, I believe, at least minimum, and about 10 days minimum where I'll have all my new accounts up to speed with my current account. So 10 days for my current account, another 10 days to get the new XFAs up to speed minimum. So 20 trading days minimum. That's if I have a perfect record, and that's definitely not going to happen. But it's important to know these timelines because I also have to look at my personality, my lifestyle, and my goals and see what's happening in the next month. Because in the next month, this is when everything's going to be online. Well, in the next month, I might be in Europe or in Asia for the next 2 months. Different time zones, might need a different strategy going into those, once I get past these things. So this gives me a lot of data. And also, it helps me be patient when my account is growing slowly. I know where it's going to be. And because I know where it's going to be, it's easy to be patient because I like where it's going to end up. So anyway, so once all that happens, now I can copy trade all my accounts at the same time with the same level. And I'll be doing it at 10% risk and growing from there. Once I get down to here, which is about 30 days, I'll be able to start taking my payouts of $5,000. And anytime I take a payout, I reduce the number up here. So let's say I get to 35,000 in my account. You can see all these are green. I'm allowed to risk $3,000 per trade. But now I take a payout. So I have to take into account that, and then it reduces my risk. So my scaling ladder goes up and down. If I take $10,000 loss in here and end up with 20,000, scaling ladder goes down. So I scale up and scale down, and that's how my account can stay alive for a long time. So I'll start taking my payouts right here, and I'll pretty much stay at this level until I move over to live. And this is my live account. So hopefully I'll move over with 150,000. But if I don't, then I'll just adjust this to be whatever that is that I move over with. But the net shows me that I can risk $3,000 per trade. I'm actually making 6,000. So this thing would exponentially grow faster than what you see here. And then I can go down my scaling ladder and see where I'm going to be at in 6 months, a year, and so on. 5 months is where I'm projected to be right here. $660,000 in my live account in 5 months of trading it, if I start with 150K. So the scaling ladder is pretty critical and helping me with my mental fitness and keeping me from FOMOing. So when I see a trade, I'm like, oh, I really want to get in it. Like, nope, just stick to the scaling ladder. In 5 months, you're going to have 600 grand in your account. If you want to FOMO into this trade, you might be starting over. Why are you going to do that to yourself? And that helps me stay on track and stay focused and kind of stay ahead on that mental game, right? Trading is two games. It's pattern recognition and a psychological game. And this helps me beat that psychological game. And then as I'm trading and taking payouts, I'm going to track that in my personal calendar. A lot of prop firms now give you dashboards with calendars and all that stuff. But if you leave the prop firm, well, you don't have access to that anymore. So this is where I'm tracking my payouts. So I can keep tracking, go back and say, when did I take my payouts again? And then I'll have record of all of that stuff in here. And then I'm using an online service to track all my trades that I can be able to go back and research like different data. Like, hey, when I was trading with this strategy, what happened? When I traded with that strategy, what happened? Like I can see all that different data with that separate online account. Again, link in the description below. And prop firms, a lot of them are providing you with some kind of service like that. But again, when you leave that prop firm, you lose that data. So I want to have it myself. So I'm using this Excel document and then that online tracking software so I can track my trades. All right, so that's it for this video, basically, with round 3, my trade plan overview, markets my way, prop firm trading. So now you're up to speed. You got a good idea of what I'm doing. Now I'm going to show you that trade from Friday, and then I will see you next week.
Order filled. Order filled. Order filled.